Good morning, ladies and gentlemen. Everybody, welcome back to another pre-market watch list. Thanks again for tuning in. I know I haven't been on in a couple days, maybe even more like a week, but I've been busy. And the markets have been crazy. So anyways, we're going to get into it here just a little bit. So just wait for some people to stroll on in and we'll get going. Good morning, Amin. Good morning, good morning. So yeah, we have maybe quite a bit to touch on. I've been gone for about a week here now, maybe a little more, a little less. Don't really know, honestly. But good morning, and let's get rocking and rolling. So really, we're very close to a bear market territory. All right, we have maybe a few more. Really, I think we have down about to about 2,720, 2,000, or 272, depending on what instrument you're looking at. But basically, we have a few more percentage points down, and then we're going to be into a bear market in the stock market. Basically, once the market, let me show you guys. Once the S&P 500 gets back below 273.20 into like basically 272, that's where we'll be in a bear market, okay? So we have, again, a few percentage points down, and then officially we will enter into a bear market. But again, it's really only until the prices start closing 20% below that you could even consider yourself in a bear market. Because if price just reaches it and then bounces back up, you really can't consider it, but you know what I mean, okay? So good morning, good morning, good morning, good morning. I will talk pretty much about any stock you guys want to talk about today, just because there isn't one particular stock that I like over pretty much any other stock. There's nothing I'm really crazy about today. After scanning the market, after looking around, I haven't found any particular setups on the day that I've been really, really antsy about. So this might just, again, be a day where I just kind of sit and watch and maybe make a couple small trades here and there. But again, nothing really, really stuck out at me today. So, yeah, let's go and take a look at Tesla right now. Ultimately, the SPY is kind of bearish. I was long the SPY for the past day. You could say I pretty much got long here and was selling over here on these tops. Looking for a divergence bounce. We got a bounce and we had another bounce, but we never had enough to really get us to reverse. So I was long from this day to here, pre-market. And now we're kind of rolling back over, unfortunately, which isn't looking good, by the way. All right, so let's go take a look at Tesla. So if you look at Tesla, you will probably be surprised to see that it's no longer near 1,000, and it's actually starting to come down to that 620, 650, 500, 550 area, which we said was probably going to be the buy price. Is it coincidence? Maybe. Who knows? The coronavirus, and then, of course, Tesla crashes. So was Tesla a bubble? Of course it was a bubble, but it just coincided with the coronavirus kind of stock market fear. So maybe it came down a little bit quicker. Who's really to blame here? We don't know, but it is very coincidental that Tesla just so happens to line up with the coronavirus. So, simply to put it, Tesla could become a $7,000 stock in the future, but there was no way it was going to turn into a $7,000 stock that quickly. So, for me right now, Tesla is still kind of not a buy because the markets are so bearish. Tesla can still drag out, but we are getting closer to the buy price, and the buy price on Tesla is going to be basically, I can't draw it perfectly, I don't think right here, but let's see what that price is, 5, yeah. So pretty much anywhere from 500 to 6, to 550s. We'll see. It's still coming down some. The markets are still bearish, so it's hard to really give an estimate for sure. But that 500, 550 is the zone on Tesla where you are probably going to start seeing some buying, reversing, chopping going on, okay? Okay. So Austin, I know you're like, can you look at Tesla? So for right now, if you look at the daily chart, there's no reversal signals yet. We still don't have any bullish divergence as we're coming down. The 4-hour chart, I think, is a little differently. Yeah, the 4-hour chart, we're starting to see a divergence. That could play out. Again, still very important on how the markets play today. So ultimately, I think Tesla's still kind of a downshoot up until we get into like the 500s to 550s. That was initially my first price target. Then it went to 650. Now it's back down to 500, right into the 550. So the price target for a buy has changed 2 or 3 times for me on Tesla, depending on how it's been trading. But we're still really in that pretty much 650 to 500 zone as a buy. When it was up at 950, 800, 700, 750, again, the buy price for me was still down in the 550s to 600 kind of zone. So that's still where I'm looking at right now. Okay. Oh yeah, JD, I don't doubt it. This is something that I've been expecting was going to happen well before mainstream media and pretty much most of the world would think something like this would happen. And that's only because I pretty much stay up to date on everything that's usually kind of going on because I'm trading. I mean, it's just what kind of happens. You just kind of naturally get involved with what's going around. So I myself was always one who really saw this as something that would negatively affect the markets pretty bad. How much of an effect it's going to have in terms of people's lives, how sick people get, are people really going to become death? That I'm not a scientist, I'm not a doctor, I don't know for sure, but I always knew that it was going to have a big disruption on the economy. And remember, before the market started going down, when the markets were actually going into all-time highs and the coronavirus news was coming out, I was specifically saying, watch for quarter one. Quarter one's going to be terrible. Watch for quarter one. Quarter one will be terrible. I didn't think that the markets would roll over quite as quick as they did. I thought we might wait for quarter one, but that was the markets pricing in the fact that quarter one's probably going to be terrible for a lot of stocks. So the markets started to move well before quarter one releases. That way they could kind of price in the negative effects from the coronavirus disruption. So come quarter one, you're probably going to see a negative effect on a lot of airlines and just companies in general. And then what happens from there, it's kind of hard to judge right now, but we might even see a terrible quarter two. What I'm kind of thinking we might see is I think we might see a depressed market run into quarter one. And then I think we're going to see bad quarter one reports and maybe the markets even bounce on them to be sold into again. But that's a theory. And anyways, so yeah, there's a lot going on right now. Well, Annie, I don't know for sure if again they would shut markets down entirely. I mean, anything's really possible. But no, absolutely they should pretty much not shut the markets down. In my opinion, really ever. I don't think if something's skyrocketing so high that it should be halted, and I don't think if something's dropping so significant it should be halted. I mean, maybe it should. Maybe my thought process here is incorrect, but in reality, that is just manipulating the markets. If you think about it, say if something's going down really, really fast, yes, we're going to halt it so we can kind of give investors a time to resettle, rethink, blah, 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 to maybe keep it from keep going down. But at the end of the day, I mean, that is not free market movement. That is you stopping the markets from moving freely. It's really the exact opposite of a free market. Will they shut them down for a couple days? Probably not. I hardly doubt that would happen. You might get it shut down for a day if things got really bad. But you need extremely, extremely harsh selling for that to happen. In the day that the SPY or the day that the markets actually froze and everything was halted, wasn't even really that bad. I mean, if you really think about it, it wasn't bad at all. All that happened was an overnight gap down. Pretty much nobody was trading. The markets just gapped down so much overnight, just the slightest selling pressure as soon as the market opened kicked it into a circuit breaker halt. When in reality, there was almost zero selling to bring it down there. There was just an overnight gap. So in reality, most of the markets didn't even participate in the negative movement. They just woke up to, oh shit, The market's down like 7% over, and holy shit, that's what happened. But nobody really even participated in the selling. So, yeah, I don't think that would happen. Hump day counter. Yes, it is hump day. CRAG, is it worth taking a look at? I'm not sure. I haven't looked at that stock, and I don't even know how long, but I'll take a gander. Yeah, not sure what it has to do with car gurus. Car gurus. They're down. You could actually, I mean, I don't, it's actually what's funny is, I mean, you actually might be able to argue, actually, there is a slight bullish divergence on that. So, yeah, maybe you see a little bit of reversal. I think it's worth watching. See if you start to get bullish divergences for a long play. You already got the early signal of one. It's been kind of trending down, so I'd let it keep doing that. But you don't really have any confirmation reversal, anything like that. You're just starting to get the early stages of a reversal, and trying to counter trend trades for some people isn't that hard. But you do have a bullish divergence starting on that. Very slight right now. I was going to say that typically in down markets or bad markets, used car sales actually go up or perform much, much better than obviously like GM or Ford, because people are in kind of a money crunch and they stop buying new cars. So a lot of times used car sales actually go up. So it's kind of thinking something like Car Gurus, but I haven't been on their site for a while. I don't know if it's just an information site or if they sell used cars or new cars, but something like CarMax, maybe Kelley Blue Book. Some things like that might actually be good through a recessional period, because a lot of people end up buying used cars over new cars in periods like that. So, but I've already seen CarMax kill it this year. I think it's KMX. Yeah, CarMax has already just destroyed over the past 2 years. So that's probably pretty high in the cycle and probably not something you'd even want to consider buying right now, honestly. Yeah, look at, they crushed it over the last year, just annihilated. And it's actually funny. I read a research paper, analyst research paper back in I think it was 2017, and they're like, CarMax is our number one pick. And I kind of followed and just watched it, and sure enough, they did right. HTBX might break out. What if I told you that stocks are not meant to break out? What if I told you to take the blue pill? HTBX? Didn't that was that moving yesterday? Yeah, so HTBX, you might get a little push on it, but I'd pretty much be done with it. I mean, you might get over these highs. Yeah, you might break over that, but it's not supposed to. So if it happens, it'd be pretty irrational. So yeah, I'm probably going to go with HTBX as a no-go. Probably a good time to be selling. If it goes up, great, but probably not. It just doesn't have that beautiful looking formation. What do I think of Forex trading? I don't think, I mean, if you want to do it, go ahead. It's pretty much the same thing as anything. Just putting money at risk, buy low, sell high. There's more to it. Yeah, you're looking at currency pairs, and you're going to have to deal more with world economics than you're going to have to with, just solely your own country's economics. But yeah, not bad. Yeah, so that was something I was mentioning. Maybe I didn't mention enough, guys. If you look at the S&P 500, it's starting to give you signs of a bullish divergence. That's why I was long on it yesterday. Was it yesterday? No, the day before yesterday. Was it the day before? Yeah, it was the day before yesterday. But ultimately, yeah, the S&P 500 is starting to get a bullish divergence on it. And, watch it. That's all I'm saying. Watch. I mean, it's really gotten oversold quite a bit. We've broken, we might be even one deviation below its standard deviation at this point. So we're just oversold. we're really into kind of some uncharted territory and water, because the markets are moving in a fashion that nobody, I don't want to say nobody's used to, but really nobody's used to it. If anybody actually tells you that they're used to this sort of market movement, it's a lie. And the reason we know it's a lie, or maybe it's not even a lie, but just maybe whatever you want to call it, is false, because how many times does the stock market crash? How often is the stock market ever actually crashing? Not very often. So really, people don't have extreme experience even I don't even have extreme experience when it comes to these particular market conditions. You may have experienced it before, but doesn't make you super experienced. We experience the markets usually going up every single day by like a point, maybe a point and a half, 0.5%. That's normal. But markets dropping 7% overnight, then jumping up $12, $14 overnight, then dropping 6 points overnight. No one's really used to that market movement. A lot of it's emotion, a lot of it's fear right now. And the drop has been so drastic, and it's gone down so much below specific levels in normalities that we're trading in uncharted waters right now. And that's part of what's kind of just mixing into this whole move, is that we really have moved so far outside of the norm that people are kind of like 1 foot in, 1 foot out, 1 foot in. I don't know. And so there's a lot of uncertainties. Okay, guys, this is not pushing fear here, but coronavirus, the whole problem. It's an uncharted. Nobody has a clue on the exact damages it could have on the economy. All right. If anybody wants to toot my horn for me here, I got to give myself some credit. It was only like 4 or 5 weeks ago we said this is probably going to get pretty bad. And then we said, watch, Q1 is going to be terrible for stocks. And then Apple and Target and everybody started saying that their Q1 report was going to be bad. So we were calling for bad reports before the companies even announced it. And then we said, watch and wait. If this keeps progressing, schools are going to close, and then parents are going to be forced to stay home. And if they're forced to stay home, they're not going to be working. If they're not working, there's no economic output. And guess what's happened? They were closing schools in Japan. I think they started closing schools in some places of Italy. They've already been in discussion of closing some schools in the United States. So how much further, how much we progress, how bad it gets, it's still unknown, but it's not hard to predict what will happen. If it's literally just like an algebraic equation, like literally, right? A plus B equals C kind of thing, right? So you literally just look at the possible scenario that is, well, if it keeps progressing and it gets really bad, they're going to close schools. What happens if you close schools? If you close schools, then parents need to at least be home to stay with their kids, or they're going to have to get a babysitter. But what are the chances that your parents are going to want to get a babysitter that could possibly be sick and then infect you, that could infect the parents, that could infect the grandparents? There's so many unknowns right now. It's pretty crazy. And now, again, not to fearmonger, if none of you guys are up to date, the death rate, once you exceed, it was like the ages of 80, maybe 85, jumped to like 15%. So if you were to look at the statistics between the common flu, which is bad, and coronavirus, which is still unknown to an extent, the death rate of coronavirus is significantly higher than that of the flu. Do I think that we're not going to get over this? No, I think that this is going to be just like all other viruses, and people will pass away, people will get sick, people will recover, markets will recover, but we're just not there yet. We're not ready. That's just it, that we haven't seen this play out fully yet. So we still have time in that regard, okay? And yes, if you look at the statistics on it, the death rate of COVID-19 and the flu are significantly different. It's significantly higher for coronavirus than it is the flu. So it should be treated equally as important, if not more important. And I don't think I think the markets are overreacting a bit in the short term, but you don't know yet until you see Q1 and how bad it really is, okay? All right. Miss you too, guys. Miss you too. So I'm not really, yeah. So like I haven't been, actually, well, I don't know. Anyways, I haven't really been short this market in terms of like the S&P or anything like that. So I haven't really been short bias, and not that I haven't wanted to be, and not that I don't kind of missed it. I mean, I'm not gonna lie. I was literally the one. I was literally at least one person. I was like, the market is gonna correct. It's about to happen. I can see it. I even made a YouTube video saying, look at the divergence. This is gonna roll over, and I still didn't pull the trigger. But anyways, you know, you suck sometimes. So that happened. But if you look at the prices of airline stocks, if you look at Delta, you know, just a couple of them, you're going to see that the prices have been extremely depressed. And you got to ask yourself, are you shorting low or shorting high? So I'm really not crazy about being short the market right now in the micro environment. In the micro time frame, I don't want to be short. I want to be long because everyone's been short, right? And the good short happened when the market was at all-time highs. Once the markets drop, there hasn't really been a great short, right? If we go look at the SPY, oh, I'm on HTBX. Figures, makes sense. Right, if you look at the SPY, we drop from here, right, and then we bounce, and that's it. I mean, there hasn't really been, I mean, there's been the drop here, which was good, but since then, I mean, you haven't really seen another really great short. Intraday, there's been good plays, yes. But the further you go down like this, I mean, the higher the risk is that you're going to run into a reversal and a kind of a squeeze move, right? And you're already, like I said, you're already getting early signs of a reversal. So where much of the market is thinking maybe still down, I'm thinking up, right? So if I'm thinking up, I know I'm not the only one thinking up, right? So that's where we're at, right? And we could look at technicals and all sorts of, you know, whatever you want, but I mean, it's pretty straightforward. I mean, you have a support system here, right? We're most likely, to me, it seems hard to believe that we'd see the markets go below this by much and then go all the way like down here. You will most likely see the markets at 234 sooner than later, or at some point you will see the SPY probably down to this level. But in the micro time frame, I just didn't see that happening. I saw a bounce. We've already bounced. We bounced from 273 all the way to almost 290. So we already had, you know, close to a 20-point bounce, 15-point bounce. We're already getting sold into. But like I said, if you look at the daily chart, you have an early sign of a divergence, right? You have it right here. Low, new low, higher momentum. So you already got the early stages of a divergence on a 1-hour chart. You have it on a 4-hour chart. It could go lower. We can still go lower and still keep diverging, right? So I think ultimately we will see, you know, sort of a bounce back. And that's where I would be more considerable of, or that's where I would consider shorting the market more. Because the great move started here. Dead cat bounce short was here. If you're shorting here, you're shorting into a bullish divergence move, which you could go lower, but you can also get squeezed. I still think we're going to move a little bit lower, but ultimately, right now, I'm kind of on just the hesitating, kind of long side of the market. Okay. So puts on airlines, no, I don't really think getting puts on airlines is a great approach. I mean, I'm still flying. I mean, I'm really not worried, right? You know, if what the data is telling me, that it's basically telling me that I have a very strong chance of survival even if I get sick. So I'm really not worried about traveling, so I'll still go out and buy things. Doesn't mean the airlines aren't going to go down. They could very well go down. But you just have to be able to tell yourself, are you shorting something at the low or are you getting a good deal? And I would say right now you're not getting a good deal for shorting because the short move on the stock market happened all the way at 337. If you go look at DAL, right? Delta Airlines, the good short started at 62. Could go much lower, but in the micro time frame, can I get a better price than what it's giving me right now? And I think we can. Once we see the markets bounce, and they will bounce, or they won't. But how often do markets go straight down for forever? Not very often. I would probably wait for a bounce. you're already seeing a bullish divergence occurring on DAL. But it's a slow grinding one, so the reversal will probably be slow and grindy. But you're already seeing a bullish reversal signal on Delta Airlines. So would I want to be going short into a bullish divergence setup? Probably not. Okay. LK has earnings before I didn't even know that they reported. LK actually, believe it or not, kind of looks pretty bearish. Yeah, you might even want to. But I've been here before, and it always squeezes you up. You know, I've seen that. I've seen that look before. Yeah, pretty much. It's pretty straightforward. If you break below these lows, you're going to get a panic sell-off. If it holds, you'll get a squeeze. So it's pretty much over under 35.94. Whoa. So again, I'm just some dude on YouTube behind a computer screen that knows a lot about finance and stocks. I'm not the CDC. I'm not anybody other than just some random 26-year-old dude that uses his brain. And that is, I mean, they're quarantining people in New York. That's pretty crazy. But again, this whole time you've had a lot of the world saying, oh, it's just a common flu, or it's just a virus and it'll pass like all others. Sure, it might do that in time. But why would other countries lock down entire countries if it really isn't serious? I don't know. So, with that being said, I think again, it's going to get much worse before it gets better. And so I'm not buying any stocks long. That's actually another thing, right? So I'm still long gold and silver, as I have been for like 2.5 years now. I've been saying get long gold and silver, be long gold and silver, because if it gets much worse, people will keep fleeing into gold and silver as a safe haven. Not really buying any stocks, even after this crash or this move down, this market correction, whatever you want to call it, this bear market. Next thing to come up might even be emerging markets and not even the United States. I might not even be buying much in the United States markets and might start putting more money into emerging developing countries. A little bit higher risk for sure, but way more growth potential than the United States, without a doubt. Because we're already developed. That's time for another discussion. We'll go on too long if I go into that. Jokes aside, it's kind of bad, yeah. Adelaide, I haven't even been, for the past week and a half, I pretty much haven't even been trading, to be completely honest. I've been on vacation and so on and so forth. So really haven't even been trading, to be completely honest with you. And then again, why not load recaps? I mean, I do it sometimes I don't do it. I mean, it just, I don't know, if I feel like doing it, I'll do it. At this point, really is where it's gotten to. I mean, there's so many recaps on YouTube you could go and watch. I mean, mine included, Warrior Trading. I mean, if you're really trying to learn, I mean, there's plenty of videos out there, whether it's recaps or RSI, or I mean, there's so much on the net you can get there. So yeah, with that being said, guys, everybody take care. Have a great rest of your day. I'm going to close down the stream and bring it back online shortly with, I think we have up like maybe 10 or 12 different scanners now. So more scanners than we usually have up. So that's good. All right, guys, everybody take care, and I will see you guys tomorrow for another stream.